Good morning, everyone, and welcome to our special Fun Friday edition of Capital Markets Quickie. I'm your host, Andrit Sella. Today, we're taking a little detour from our regular news updates to talk about something every investor wonders about. How do I spot a solid company to invest in? All right, well, let's dive right in with our triple check method. But let me also remind you that there are many other factors to look at, but we have to start somewhere, right? First up, let's talk money. Valuation is essentially how the market values a company right now. This often comes down to looking at ratios like the price to earnings ratio or PE ratio. If a company's PE ratio is way higher than its competitors or its historical average, it might just be overvalued. But remember, low doesn't always mean buy, and high doesn't always mean sell. It's more about understanding the why behind the valuation. Next on our list is debt. Think of debt like the backpack you lug around. A little can help you, think textbooks for studying, but too much can slow you down. Companies are no different. A manageable amount of debt can actually be beneficial and allow a company to grow. But too much, well, then we see red flags everywhere. So, therefore, it's important to look at the debt to equity ratio, for example. This will give you a quick snapshot of a company's financial leverage. And this is especially important in times of higher inflation rates, which is the case right now, and you don't want to take on too much debt, which could ultimately reduce future cash flows. Now, let's move on to the business model of a company, or the economic moat. This one's definitely and by far my favorite, but it's not that easy to decipher. The term economic moat sounds medieval, but it's pretty straightforward because it's all about a company's competitive advantage. Think about castles and their moats. A wide, shark-infested moat protected the castle from enemies. And similarly, a company with a strong economic moat is well defended against competitors. This could be because of brand loyalty, exclusive access to the best natural resources, or patent rights. If you spot a company with a distinct edge over its competitors, you might just be looking at a winner, and you should hold on. All right, there you have it, our Fun Friday quick guide on how to spot a potentially good investment. Keep these 3 checkpoints in mind, and you'll be on your way to making more informed decisions. But remember, investing isn't a guaranteed game. Always do your own research or chat with a financial advisor. Thanks for tuning in into this special edition of Capital Markets Quickie. We'll be back on track with market news next week. There's a lot to talk about. Until then, have a fantastic weekend, everyone. And as always, cheerio.